Good afternoon, everybody, and welcome back to your favorite YouTube tax channel, Fast CPAs and Consultants. As every week, here we are with our CPA, Fulton Abraham Sanchez. Hi, Fulton. Welcome back.
Thank you, Monica. Hi.
Hi. So today we are going to talk about IRS debt. So Fulton, are we ready to start with the first question?
Yes, should be.
Perfect. So we have the first one. How do I get my IRS debt forgiven?
Okay. The forgiveness of IRS debt has some requirements. One of the requirements that I always mention in our videos is that you have to be broke. It's a virtual bankruptcy. No, it doesn't mean that you don't have any, and you have no pay. I mean, not even a penny. No, bankruptcy means that you are not able to pay your debts. That's the concept. The technical concept of bankruptcy is that you are not able to honor your debts, meaning that you are not able to make payments for your debts, not even for the interest, any kind of debt. So if you are unable to honor your debts or most of your debts, you are in a technical bankruptcy. That is the pre-requirement or the requirement that you need to prove to the IRS that you are broke. And because you are broke, meaning that you are not able to honor your commitments, therefore you cannot pay your tax debt. But you have to prove that. There is a long list of requirements that starts with your bank statements. That is the bank statements that you have that at least 6 months needs to show that you have a minimum balance, that after all your payments, after all the money that you have, you earn, after all your expenses, there is a minimum balance that it will not be able to cover, not even a monthly payment plan for your IRS debt. That will be one requirement. Second, that you file a long report showing all your income, your expenses, your assets, your liabilities. All of them need to prove the IRS that you are broke, meaning that you are barely covering your expenses in terms of housing, food, perhaps education for your kids. And after that, you have no money left. But this is a long report. This is an evaluation from the IRS. And once all this is forgiven, once all this is proved and accepted, the IRS will consider your offer. And if the offer is within the parameters that the IRS require, then it will be, you will have to pay at least 10% of the debt. That's one way. When you are not like in the streets, but you are broke. Like you have nothing. Like you have income, but that income is not enough to cover, not even or barely to cover your expenses. The expenses that every family will have. That's one way to request, but you have to request to the IRS with something that is called offering compromise. We will talk that a little later. That's one way to have your debt forgiven. The other way is when you are really in the street, when you are broke and re-broke, meaning that you have no money, you are broke, you have no income. And that's easily proved with your bank statement. You have no income. Therefore, if that is your case, the IRS, after an application, obviously, the IRS can qualify you for economic calamity. This economic calamity will allow you to let's say to apply to apply to something that is called a 10-year forbearance. A 10-year forbearance of your debt, the IRS, after all this evaluation that you are not able to provide for, you have no income, and the IRS, and after receiving multiple bills, the IRS assigns you an officer, and the officer, and you proves, and I know of clients that they actually have met in person with a revenue officer, and they have proof with to the extent of the doubt that they have no income and they are broke. I mean, practical in the streets. I have no income, therefore your debt will be put in something that is called a forbearance, and a 10-year forbearance. During those 10 years, you receive no income, meaning no one gives you a W-2 or a 1099. You receive no income that is reported to the IRS. Your debt is forgiven after 10 years. But after 10 years, you have to apply for the definitely forgiveness. So it's an application for forgiveness at the beginning, an application for forgiveness at the end of the 10 years. But that is, remember, if you earn W-2, 1099 income, you will not qualify for that. You have to be broke, I mean, really like practically in the street. If you have W-2 income and 1099, and that income is not enough to cover your expenses, whereas to pay IRS debt, then you can qualify for the first option that we said is the the offering compromise. But that is only if you are able to prove to the extent of the doubt that you, in reality, you cannot afford to pay your debts because even though you have income, is not enough to cover your expenses.
That's clear, thank you. Besides of the situations you have mentioned, is there other way that the IRS can forgive debt after 10 years?
No. The only thing is that within 10 years, if the IRS is notified and receive a 1099 on a W-2, it will ruin the whole process. And at that moment, the IRS will send you a letter saying that they need the payment for the debt or you do an installment agreement. Or okay. You can also apply for an offering compromise. It depends on your income. It all depends on the income. If you have no income, basically, and you're there and you owe to the IRS, you can claim for economic calamity, and that will put you in 10 years. But if within those a year you receive income, then no, then the complete forbearance is gone, and then the new period starts to run, and the IRS will require full payment of the debt. Now, if the income that you receive within those 10 years is not enough to cover your expenses, then you can opt for, or you can apply for the offering compromise, because if your income will not cover your expense, you can apply for the offering compromise, and that offering compromise will allow you to pay 10%. Now, that 10% of the debt. Now, remember, the IRS is going to, when you apply for an offering compromise and you have no income, the IRS is going to ask you, how have you survived all these years? Who has given you money? If you are living by yourself, it's impossible that you are not making income in cash. So the IRS is not gonna believe you. It has to be credible, like you live with a relative, or you live with your children, that they are providing you care for you and shelter, and that will be credible to the IRS. And you have to be reported as a dependent in the tax return of your children, because otherwise, how have you survived? You say that you receive food stamps, yeah, but who pays your rent? Do you live by yourself or no? Then you are supposed to be making money. Otherwise, how do you live? How do you pay your rent? Meaning that if you pay your rent, you are making some cash. Why you are not reporting that cash? So all these questions are going to arise, and it's very recommendable that the client do not talk to the IRS directly, because there is a lot of feeling of injustice whenever you are talking to the IRS that will compromise your position with the IRS, because whenever you talk to the IRS officer over the phone, the IRS officer is going to write in your file. And once the next officer reads that officer is predisposed to treat the same way that the other one that talked to you. So it's very, very easy to screw it up. So better to deal with an attorney, a CPA, or an enrolled agent that knows this from the beginning, that has experience with this.
Okay, clear, thank you. And what are the consequences of not paying my IRS debt?
Basically, the last consequences is to be in your accounts will be kidnapped. The IRS will take charge of your accounts and your money, your bank accounts, a garnishment of 10% of your salary if you're employed, and the employer will automatically send that money to the IRS. And if you own property, the IRS will place a lien on your property. And that lien will not disappear until you sell the property. And to sell the property, when the closing agent, when there is a closing on your property, when you sell the property, the closing agent will automatically retain the amount that is owed to the IRS, and that will be the first reimbursement of money to the IRS, and then the rest will be given to you. That will be one. Second, if you owe money to the IRS and you don't do even an installment agreement, and you owe more than $50,000, the IRS will deny the renewal of your passport. That's another consequence. You will not be able to travel. It doesn't mean that the IRS is going to wait like a marshal is going to be waiting for you at the airport when you come from a trip, and then they take you in a scuff. No, that's for the movies. There is no prison for debt here unless the person is not paying Social Security taxes. I'm going to talk that in a minute. I'm just trying to address the individual thing. If you don't pay your debt, the IRS is going to deny, over $50,000 is going to deny your passport. You are not going to go to jail. There's no sheriff waiting for you at the airport. There's no FBI. That's for the movies. The only thing is that you will not be able to renew your passport. You will not be able to travel, because the IRS will communicate or will inform to the State Department that there is a pending debt, and because of the IRS because of the Internal Revenue Code, the IRS regulations, then there is no renewal for the passport. Once the State Department is informed, the State Department will deny the renewal of your passport, even if you have an existing passport. And if you're applying for a new one, it will also be denied. So you will not be able to drive outside. Now, that works for people who own money for debt, for personal debts. Things change and a lot when there is a business owner, a company owner, and that company owner is responsible to pay for payroll taxes. Payroll taxes that have been withheld from the employee, and the portion from the employee that is Social Security and Medicare, 7.65% of the salary, and another equal portion, 7.65%, for the contribution of the company, of the employer, to the Social Security and Medicare. So in total, it's 15.2% of the salary of the employee. That money is an obligation to tender, to give that money to the IRS. Every month, it's supposed to be paid. The business owner, the company owner is supposed to pay that if he or she is hiring employees and the employees are being withheld that money. That money, the portion from the employee and the portion for the company, is supposed to be given, to be paid to the IRS every year, every month. If the employer doesn't pay that, will face criminal charges. And even if the employer leave the country, he cannot return, because there a sheriff will be waiting for that employee, and it will take him or her directly to jail.
Wow. For
the simple reason that that employee has misappropriated funds that do not belong to him or her. And because of that appropriation, or them, because of that misappropriation, then the government now has been damaged. And because of that damage, there is fraud. It's a felony. And because of that felony, there is a punishment. And that punishment is jail. And once you are indicted, it's prison. So things change completely when there are payroll taxes that are not paid to the U.S. Treasury, to the Social Security, and to the Medicare. If they are not given to the proper authority, to the Social Security and Medicare, on a monthly basis, when you are withheld that money from your employees, if you don't pay that for 1 year, you will be indicted and you will go to jail. And then even if you run out of the country, you cannot ever come back, because when you come back, the sheriff will be waiting for you at the airport and they will take you to jail. So be very careful if you have employees and you are withholding the money and you are not using. There are 1,000 reasons why a company is not paying tax. It's not paying the Social Security taxes. It's a lack of funds. It's running out of working capital. It's a lot of reasons. But the problem is that you have the first person that you have to pay if you have a business, even before credit cards and the bank, is to the IRS and to the Social Security and to the Medicare. That is the first. If this is Social Security taxes, this is payroll tax, because otherwise you will be a criminal.
Well, thank you. Understood. And there is a program. So what is the Fresh Start program with the IRS?
Oh, that program was enacted in 2011, and basically it creates certain benefits for U.S. Citizens and also business owners of U.S. citizens, owners of businesses. So basically, before the Fresh Start program, the IRS used to look at least 4 years in the future of your taxes. Of your income. 4 years to determine that you are able or not to pay your debts. This is for an offering compromise. For example, you owe $100,000. The IRS and you want to apply to the offering compromise, meaning that you are not, your expenses are enough or are high enough to cover all your income, or your income is just barely covering your expenses. You are practically broke because you cannot comply with your debt. You cannot pay your interest. You cannot pay anything. You can just survive. Therefore, you qualify for the offering compromise. But instead of the IRS looking 4 years in the future, now the IRS is only look at 2 years at the future. Therefore, it's not gonna. There is more probabilities of your offering compromise being accepted. The offering compromise is a process where you list all your income, your expenses, your assets, your liabilities, and because of that, there is a determination of the minimum amount to pay. Usually, it depends of the income. Remember, I've seen cases where it's 10%, other cases 9%. It all depends of the income. Again, and also the bank statement. The bank statement should prove that. They will also require financial statement from the mortgage. If you are leasing a car or you are paying for a car credit, if you have credit cards, if you have child support, anything that is debt that you owe, all that needs to be, for example, the child support is with an order from the court. You have to show the order from the court that how much you have to pay. For the for the statements of the mortgage have to be the most recent statement. So it's like a big chunk it's a chunk of document that you need to provide, and you need to attach to the application to make your case. If that is the case, the IRS is not going to look at 4 years or 5 years in the future to determine if you are able to pay. It's only going to look at 2 years. Therefore, increasing the amount, increasing the possibility that you are going to be approved for the forgiveness of the debt. Remember, it's not forgiveness. When you apply for the offering compromise, there's a percentage of the debt that you pay. The only way to be forgiven on a debt is what I said at the beginning, is when you are practically in the street. I mean, you are broke, you have no income, and then you are classified under the economic calamity, and then they will give you a forbearance in 10 years. But for the Fresh Start program, that is not the case. The Fresh Start program is a program to reduce the number of years that the IRS is going to look into the future to determine if your offering compromise is valid or is not valid, is going to be accepted, or even if your numbers need to be corrected, and then you have to pay a larger percentage of your debt based on the application of the offering compromise that you originally submitted. That's basically the offering compromise program. So don't believe that anyone who said that you have to pay pennies, or if you owe 10,000, if you owe 50,000, or you owe 100, you pay nothing. That's all fairy tales. The reality is that the only way to qualify for an offering compromise is that you are technically in bankruptcy, meaning that you are not able to comply with your debts. And even there, you are supposed to pay a portion of the debt, 20%, 10%, 15%, whatever the examination from the application will give you. If they say the ultimate way, the certain way to be forgiven of your debt completely is being broke in the street and then apply for the economic calamity program. It's not a program. You have to apply for it. There's no program for an economic calamity. Based on your situation, the revenue officer will evaluate that, and it will give you that denomination, and will put the debt in 10 years forbearance only if you have no income. If you are, meaning that there's no way that you can survive. Now, remember, how you pay your house, I mean, how do you pay your rent? How do you survive? That will be questioned from the revenue officer. So even if you have no income, and you have your bank statements to prove it, and you live by yourself, you rent by yourself, and you pay food for yourself, they're not gonna believe you. Because how do you survive? They're gonna ask you, how do you survive? Who is giving you money? I say, okay, no, I live in a room that is the house of one of my children. Fine. Okay, then they will require a statement. They will require proof that is true. And then who give you your maintenance, your food? Your food. My children, one of my children give me. Okay, fine. So they will need proof from that. Therefore, if you live by yourself, it will not work. It may be, and even will be even worse, because they will ask you, so tell me, where is the cash? How do you pay for this? And then, believe me, at that point, you don't want to be in that position. So before doing all this, get a professional qualified attorney, a CPA or enrolled agent who is experienced dealing with tax resolution.
Understood. Thank you. And what do you do if you owe the IRS and can't pay?
It all depends on if you cannot pay the full amount because of a temporal economic situation, or you cannot permanently pay the amount because you are in bankruptcy or you are broke in the street, whatever the situation is. Remember that the easiest way to pay your debt is to do an installment agreement, because you do have income, you are working, you receive a W-2, you have enough money to pay for your debts, and therefore to pay for the IRS debt. That is one of the main debts that we are supposed to pay because of the entitlements that we have in the USA. Now, if you are in a situation of calamity, that you are in the streets, practically in the streets, then you can talk to the revenue officer, to the IRS, and say that you are broke, you have no income, and they will ask you for a list of documents, and if you pass the examination, they will give you that forbearance for 10 years. But remember, if the situation is not permanent, meaning that you are disabled, meaning that you cannot work for any medical reason, whatever the reason is. If that doesn't apply, and this is temporal, the IRS is going to look into your records every year. And if the next year your situation change, then whatever you apply for, it will be erased, and you have to pay your taxes. So if the situation is temporary, and you expect the situation to improve, then do a payment plan. Do a payment plan, and that payment plan pay the minimum. You pay the minimum and honor the payment plan. And then when the situation improves, you start increasing the amount of the payment, or perhaps pay the whole amount. But do that. Do not ever get, when you have means, you have money, to pay, funds to pay your taxes, do not get in blank. The best way but do it with a professional at your side, a CPA, an attorney, or an enrolled agent, or if you call to in the worst of the circumstances, you talk to the IRS, you tell them you always have to talk to them with the truth and treat the person on the other side of the phone like a police officer. Then believe me, they're gonna love you because you treat them with respect. Those poor people, every day they receive this phone call from people that they are angry, that they feel there is injustice, that is not fair. So imagine how they feel when they address a person who treats them with respect and with dignity. They are so surprised that you can even listen to them and hear them to their response. When they talk to you, it's like they talk to you like a professional because you are a professional with them. Now, if that is the case and you are not able to pay your debt, the worst thing you can do is nothing. You have to do something. You have to talk to someone. If you are really broke, talk to the IRS saying, I have no income, I want to apply for a economic calamity. And then they will send up some papers. If they send papers, at least get a professional to review the papers and tell you what to do if you cannot hire that person. There is also, for example, there is also non-profit charities that are specialized in this type of dealings with the IRS. Remember, they are not CPAs, they are not attorneys, they are not enrolled agents. Unless usually what they have is experience in previous cases. So that could also be an option. But remember, one of the things that I know of the nonprofit is that even if you do not qualify for an offer in compromise, they're going to tell you, let's file it anyway, just in case. Believe me, you are wasting your money and your time, so don't do that. Look for a professional who can tell you, yes, you qualify, or no, you do not qualify. That is, if you are not able to pay your debt, do something. The worst thing is doing nothing. So do something, talk to a professional, talk to a nonprofit, or in worst of the case scenarios, when you are broke, talk to the IRS directly. There are some cases where the IRS can give you a forbearance of 6 months, but this is if your situation is temporal and you expect in 6 months to be back on your feet to be able to pay the debt. But remember, during those 6 months, interest will accumulate. So there are some options that you have. You cannot pay, and it's a temporal situation. You do an installment agreement, and you pay the minimum. If you cannot pay because you have no income, then ask for a forbearance, a temporal forbearance of at least 6 months, or 3 months, or 5 months. 6 months is, I know that the IRS can give you a forbearance, but after that, you need an installment agreement and start doing payments. And if you are broke, like in technical bankruptcy, you can apply to an offer in compromise. The problem with applying with an offer in compromise is that the IRS is going to ask you how you're going to pay the 10% of your debt, or whatever the percentage is, if you are not able even to pay a minimum amount for installment agreement. So they're going to ask you how. You have to have a credible answer. And like a relative, some member of your family you're gonna borrow money from that person, and you have to give the name of the person and even the Social Security. That it goes at that point because the IRS is gonna verify if that person has enough income to finance you and pay that portion of the debt. That is, at that point goes, and when you put the name of the person and the Social Security, believe me, your application has a better outcome, a better possibility of a positive outcome to be accepted. That will be the second scenario to do. First it will be a temporal forbearance, 6 months. Second will be an installment agreement, pay the minimum, and then start increasing your payments when you are back on your feet. Third will be offering compromise, but it's tricky because how is that you're going to pay 10% of your debt when you're going to even afford pay a minimum of your debt? So you have to have credible answer for that. And then the last one will be, it has to be credible as well, the economic calamity, where you have a forbearance, meaning the debt will be frozen for 10 years, no letters, no nothing. The interest will accumulate in the expectation that you receive during those 10 years some money, and then the debt will be automatically restarted, will be put back in place for collection. So if in those 10 years of economic calamity, you receive no income, after 10 years, the debt is forgiven, but you have to apply for the permanent closing of your case. So those are the four scenarios that you may have.
Thank you, Fulton. Understood. And we have here the last questions, like as a conclusion, because you have already mentioned some answers. What is the best IRS debt payment plan?
The best IRS payment plan is the one that you do at the moment that you get your letter. And no, it's at the moment when you file your tax return. That is the best IRS payment plan. When you file your tax return, you do a installment agreement, a payment plan at that moment. Now, we know by experience that the payment plan, installment agreement, the payment plan doesn't kick in immediately. Even if you e-file your return with a payment plan, the IRS will not, and you e-file your tax return, you file an installment agreement, and even if the installment agreement shows automatic debit from your bank account, the IRS will not do it perhaps after 90 days. So you know that you owe the IRS, you do an installment agreement, you want automatic payments from your bank, deductions, but the IRS, you see, nothing happens. The IRS is not deducting me any money. You have the obligation to do the payments, the initial payments, at least for the first 3 months, until the IRS validates your installment agreement. Otherwise, you will have 3 months of payments that have not been done. So it's not the work, not the job of the IRS be after you for the collection of the taxes. It is your responsibility to pay those taxes to the IRS. The only thing is that if you are not able to pay, the base payment plan is set up, the setting up of the payment plan at the beginning when you file your tax return, and pay at least the first, second, and third month through the website irs.gov/payments. We're gonna put that here in the description of the video. Pay there at least the first 3 months, or until you see on your bank statement that the IRS has started to pay to do the automatic debit from your bank account. This is critical because interest will be accumulating. The more you owe, the more interest you will have to pay. So that is the best payment plan.
Okay, that's clear. Thank you. Well, those were the main questions about this subject, but don't worry, because we are going to make more videos about IRS, so stay tuned. By the way, we invite you to watch our webinars about offering compromise letters from the IRS and installment agreement. So we know you will find information very interesting as well. And last but not least, we recommend to double check if you have already subscribed to our YouTube channel, so you will be notified when we publish new videos about taxes and everything you may want to know. So thank you for joining us. Thanks to our CPA Fulton for sharing his knowledge and time.
Pleasure.
And see you everybody in the next video. Bye-bye.
Thank you. Thank you for watching us. Thank you, Monica.